You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 4th day of December 2018. Hope you're having a great Tuesday, whoever you are, wherever you are. Thanks for tuning in. So glad to have you with us. You know, we're in our second decade of broadcast history. It's a true story. So if you're new to these parts, by all means, grab your day planner. Pencil us in for the next decade. All right? Good deal. Have a chart up of the S&P 500 Emini Futures. We've been waiting since Sunday night at 6 p.m. Eastern for this gap to close, and, well, by jingos, it finally did. Now, last night in the channel, I'm going to share this with you in a bit, but I wrote, when we fill that gap, one or two things will happen. One of three, really. Consolidation, a bounce, or what we're seeing right now. Just keep on trucking. Now, I did say that we've got a weekly, you know, we got a holiday tomorrow. Normally don't do this till Thursday. Today's only Tuesday. It's the holidays, right? Now, what we may be ripping through is maybe ripping through this zone right here, 52.53. We sure are. Okay, the next one below it's 42.43. That's an important number for another reason. Okay, let's see what's happening. Let's go look real quick at the daily. Do I want this daily? I think I want this daily. Okay. This is the S&P 500 E-mini futures. This is a daily chart and fibs of the last leg up. Now, some of you will remember that back here we had a a fib webinar, and the night before that we had a fib workshop. The partner workshop turned into a fib workshop that night, and we highlighted these various areas. And then as this week progressed, a couple weeks, on the daily you don't see it as much, but I walked you through each one of these. When we hit that 24% retracement, we went over to the 30-minute chart and we could see a huge bounce. Same thing at the 38, same thing at the 50, same thing at the 62. Overshot the 62, started to print support right here, and then boom. So what I have done is on this other daily chart, see, I was drawing the fibs here, okay, from this low to this high. On the new chart, what I'm doing, okay, I'm drawing them come back. I'm drawing them not on this leg, right? I'm drawing on this leg. Is there a difference? Yes. You see, we had a double top up here. Okay. Market heads down, leg and a retracement. That's the high of the retracement, swing high. Leg and a retracement, lower high. This high is lower than this high. So down we go, and we put in a higher low. Okay, so why does this happen? Why would we put in a lower high? Well, you see, folks who took this journey and made some real nice money for their trouble, we went from like 28, I'm just going to round the numbers, 2,800 down to 2,600. It's 200 points at $50 a point. Pretty sure that's 10 grand per contract. Now, the people who took this journey, well, they wanted to take that journey again. And people who missed this journey wanted to take this journey. So what do? As price gets up into this area, they buy their ticket because they don't want to get left at the station. So the sellers come in early, okay? That's why we don't match that high. Now, the folks that rode this ride up the hill, well, they made some good money too. Just about the same. 2,600, 2,800, 200 S&P points over 1, 2, 3, 4, 5, 6, 7 days. Okay. So sellers come in early, take it down, but buyers who rode this ride, if there's going to be another ride, they want to ride it, and so they're going to come in early to make sure they don't get left at the station. Okay, so now we can draw fibs from this low to this high. This morning, as price got to the 24% retracement, on the daily candle, yeah, you can't see much, right? But I talked in the live trading room about the next fib below on the daily, the 38. I told everybody in the live trading room, I said, watch out for 27.41, or it's an area. Fibs are an area. Okay, if I've never explained that to you, or if you've never had it explained to you, they're an area. Okay. Yes, the Fibonacci math, golden ratio, etc., does print an exact spot on your chart. Yeah, but price doesn't always touch it. Sometimes it spikes through it. Sometimes it doesn't quite get to it. But that's for another day. What I want to show you here is on this move down. Okay. Last night, okay, as price came down, this is a this week weekly trading zone, 2773/2774. Now let me do this real quick. Because I'll show you some charts later that I made last night, but I just want to show you this. So if we go from Friday's low, most recent low to the most recent swing high, look at where that puts the 50% Fibonacci retracement.
Okay, well, you have to tell me what he's up to.
Right. Oh, hold on there. All right, it's good. 50% retracement at the weekly trading zone. Yeah? With me? Okay, but wait, there's more. No, really. I just showed it to you. Show it to you again. Right there. 2768.69. That 24% fib is 2768.69. Okay. 2768.69. Right there, 68. Right there. See that? So when price was coming down last night, we were in the alert channel. We were able to take advantage of the move down. Okay. But then I cautioned everyone, we're coming up on a weekly trading zone, a 50% Fibonacci retracement from the 30-minute chart, and on top of that, a 24% retracement on the daily chart up here, right here. Okay, and so I put it in the channel. We're so close to closing the gap. That's something we've been waiting on since the Globex opened Sunday night when it gapped open. Just been patiently waiting for this gap to close so the market can, it's been so concerned about closing the gap as it does that it couldn't seem to get on with business. It was difficult trading in the live training room this morning because of that. But you see how it's broke loose now? Once it finally did what it had to do, now it's going to get down to whatever the next order of business is for the market. We can't read the market's mind, but we can study the behavior patterns of the market. And that can take us a long way. From what I told you about the weekly trading zone, the 50% fib, and the 24% fib on the daily chart. Look what we did. We bounced from that 24% fib, 2767, up to 2787. A 20-point bounce. Leg retrace. Leg retrace. Leg, can't quite do it. Now, it's simple to see from this vantage point. Oh, and by the way, yes, this is a live chart, but a lot of the stuff I'm talking about is historic. Okay? In other words, it happened earlier today or yesterday. Now, anyone with a little bit of savvy and creativity can take a historic chart and make you think they are a genius, a psychic, a prophet. Be careful. Don't let people mislead you with historic charts. I'll never show you anything on a historic chart that doesn't line up with what I tell you live in real time and point out and show to you. And in the channel last night, let me get to it. There we go. Because we've studied the behavior of the market, for quite a number of years. And I started this thing way back up here. Won't burden you with all of it. If you're not on the trial, you know, because I didn't know the trial in the Logic 247 alert channel, it was to be a 3-day trial, Monday, Tuesday, Wednesday. Then I find out yesterday that we're not going to be here tomorrow. Markets are closed, we're closed, no radio, no live training room. If you've booked a mentoring session tomorrow, I won't be here. Please reschedule it. Okay. Now, what I'm going to do, it was to be a 3-day trial. Since we're missing Wednesday, the third and final day, I'm going to go ahead and extend it through Friday. So 3 days just became 4 because we lost a day. All right, with me? Okay, so here's where we were last night, okay, when I started doodling and charting and drawing. It's not closed until the current price meets Friday's closing price. From this point, you're probably looking at the single highest probability trade setup you will ever encounter. Not only do gaps on futures, the indices, almost always close, they rarely ever come this close to closing the gap and then fail. You see, we had come down here so close to closing the gap. But the market has to deal with whatever is in its path. Just like we should be trading what's in front of us, not what we want to be in front of us. The market has to deal with whatever's in front of it. And so in front of price was all the things that I've just mentioned. So price had to deal with that. Okay. This is a historical observation, not forecast or prophecy. Sometimes on a chart like the one that I just showed you of the S&P, it will close the gap to the tick and take off like someone lit a rocket. Other times it will consolidate like we see at weekly trading zones. And this morning, what did we do? Well, we consolidated right above that weekly trading zone, right above that 50% fib. Went from the 50 to the 38, back down to the 50. Now, I said if we do get that closed, watch for the gap below, or the weekly trading zone below, which is 52.53. Now, you just saw us clock right through that. That's called a slice. When price slices through a weekly trading zone like it's not even there, here's what we expect to happen. Put this up, 27.52. 53. Okay. This is what typically will happen on a slice. Price slices through like it's not even there. Now it's already come down and hit the next zone, all right? So this makes it an even higher probability that this very well could happen. So we're at 42, 43. Okay. $27, 43. And 27.42. Could it bum rush right through this zone? Yeah, it could. I think it's just spiking it, but we'll see. Okay. This is the low of the week right here. No, I'm sorry. This is the low of the week. This is last Friday's low. That's what this is over here. Okay. So when price does this at a zone, what it will typically do is it will pull back and confirm that this is going to serve as good resistance, and then it will continue the move down. Leg, retrace, leg. Same thing. This is no great mystery that I'm revealing. I just want to make sure that you're on the same page as we are, because if you're going to be in the trading room, you're going to be in the alert channel, you're going to be here on the radio program, it's no good for us to talk about something that you don't understand. So if you have questions about any of this, by all means, just ask, because we'll give you an answer. Now, it's important to remember that in this instance here, all of you were able to see something, all of your partners, all of your passport holders, you were able to see something the rest of the world couldn't see, and that's this weekly trading zone. Other people got stuff we don't have. We got something other people don't have. No big thing. It's a big world out there. So, will price get through it? I posed that question in the channel. Probably. Now, I put that in as price was still right after this, right here. We're just starting to get there. No bounce yet. Will price get through it? Probably. However, it could drive the gap purists mad for a few hours as they try to figure out why this thing just won't drop. Well, at least you know. Okay. Then I walked you through drawing the fibs, which I hope you did. Okay, so price resting there on that 20, getting close to that 24% retracement, and so I said look for a bounce. Look for a bounce. Where did that say that? Although price almost closed the gap and probably still will, it has now. We pointed out above the 50% fib on the 30-minute chart, the 24% fib on the daily and the weekly trading zone could prevent price from closing the gap even though it's just points away. We suggested a bounce, and now a few hours later I can show you what the bounce looks like. See below. Leg, retrace, leg. This is just a close-up view of the very chart you're looking at. ES bounced off the 50% fib, the 24% daily fib, and the weekly trading zone. And it bounced to the tune of 20 points. When you have that many things coming together at one time, it really deserves a second look. Now, the market also did something as it did this bounce, leg, retrace, leg. It laid a new set of fibs that price had to wind its way through before it could do what it just did, what you saw, and that was the closing of the gap and then the run down. It was a 15-point bounce. When I typed this, it became a 20-point bounce. 15 points over 6 hours has now created its own set of fibs which price must work its way through. Could price give up the valiant effort of closing the gap? Always embrace the possibility. Even though I said this, you're looking at probably the single highest probability trade setup that I know of. When a huge gap gets that close to closing, it's rare for it to turn and run without closing. So just, you might make a note of that, put it on a post-it somewhere, because there'll come a time when you'll be able to use that again. Okay. And for those of you that are on the trial, I put the fib video in here. All right. Okay. So I just want you guys to see this. It's a big dynamic, but it's so important that you understand it. We're cruising right through that 42.53. This could get violent. How violent could it get? That's a great question. It's a really good question. Let's go find out. All right. Whoa. And how are we not short that? Oh well. Get the next one. All right. ESE. And daily. Come on. Okay. I have to scrunch this up. In fact, I'm going to do this. Use the continuous contract. You can't trade the continuous contract, but you can use it for charting purposes. It allows you to pull in more data. But always check your pricing against, whatever it is you've been doing. Okay. Now they say if it looks like a W, trade it like a W. I'm not quite ready to do that. I'm not sure that it is. We're going to find out. Now, look at this low. and look at these lows across here. Okay, then what's that? High or low, right? Low or high. Okay. So now what are we looking at? Whoa. Okay. So from this double bottom here, we're going to draw all the way up to the most recent swing high. Here we go. All right. So this is still a daily chart. Now, with the continuation chart, you're always going to see a little bit difference in price. It's a couple points either way. As long as you're aware of it, it won't hurt you. Okay. So we've got this 38% retracement sitting down here. That's all the way down at 2,500. We talked about how we've come from 2,800 down to 2,600. Could we go to 2,500? Sure. I mean, look at this. This bull goes all the way back to February, right? This move right here, February of 20. I mean, this double bottom, February of 2016. Yeah. I mean, we're coming up on a 3-year anniversary for this thing. So to get a significant retracement, possibly even 50%. I know it's Santa Claus rally, all that's supposed to happen, the sleigh's loaded, and we very well may. We have 100 points overhead on the ES from 2,800 up to 2,900 that we've been looking forward to if we get back up there. But because we're trading futures, not equities, you know, if the market wants to take us down here or down here, the money's the same either way. Okay, you can buy stuff with it, pay bills with it, whatever it is you got to do. Okay, so if we come back to 2,500 on the S&P and the doomsday prophets on TV or radio are telling you it's the end of the world, the sky's falling, just don't believe it. Don't believe it. Sir John Templeton said it so well. You know, I can't quote him. I just read the quote this morning, but I can't quote it, so I'll just mash it up. Basically, over time, the markets go higher. We're trading best of breed indexes. The weak are kicked to the curb. The strong are brought in. S&P, the Dow, NASDAQ, Russell. Dow's got 30 companies. S&P's got 500. Russell's got 2,000. NASDAQ got 100. That's what the futures are, the NASDAQ 100 representation. So, where do we go from here? Okay, this is kind of a big picture to ask that question. So we drill down to our 30-minute chart and take it up close and personal look. Look at this volume. Oh, yes, because that's on a daily chart. We just took out the low of the week, or the low of last Friday. Okay. Now, when we opened Sunday, this Globex opened Sunday night, we only had one more zone overhead. 2844/40, 44/45. Now, 27. Our next weekly trading zone's 2718/19. Okay, that's going to be right about here. If it doesn't grab a toe hold there, see, we've already spiked this low right here. See that wick? Now, it very well could hold here and go. But what's the swing low? The swing low is, come on. $27.2375, and the zone's at 27.19. You know, I think it comes down a little further. If it doesn't touch the zone, I think it will at least get a little closer to it. So just kind of want to bring you up to speed on what's happened, what is happening right before our eyes. Let me run over the numbers with you, and then we'll ask Michael to give us a recap of the live training room And of course, I got a little bit of news for you, and we'll get to that. And then we'll look through some of the alerts from last night, as we do. Let me make sure I got the right numbers on my screen. Well, those are yesterday's numbers, so let's refresh. They always got a reason. I love it. The Dow drops 550 points on fears of slowing economic growth. Now, I want you to think about that. Somebody wrote that, somebody printed it, published it, and somebody on some TV channel, CNBC probably, is right now going, yep, well, the Dow dropped 550 points today on fears of slowing economic growth. Huh? How in the name of all that's noble could you figure that out? Are you with me? Somebody whisper in your ear? The market said, yeah, I'm down today because, you know, don't listen to that stuff. I mean, if you want to have it on, if you want some background noise, something when you're working, when you're trading, you know, just don't try to trade from the TV. Doesn't work, okay? All right, the numbers right now, the Dow is down 606 points. They were all crowing yesterday morning about, oh yeah, the market's up 400 and something points. This is the bull, blah, blah. You know, and then today they got little sad faces like Charlie Brown. I thought Varney was going to shed a tear this morning. We're down 170 points. And I sat back and I thought about yesterday. He was so bullish. And he's a nice guy. I like him. There's nothing wrong with him at all. He's a very fine man. But it's what they have to do. They have to be this personality on TV. And so I'm going to tell you where you want to get your trading information from. This guy right here, the market, the chart. You need to learn how to read this chart like a newspaper. Now what's the swing low? 27.21. That just might do it because the zone's at 18.19. So we got within 2 points. I can live with that. Okay. All right. The Dow down 549 points. NASDAQ down 198. That's 2.5%. S&P 500 down 61. The S&P 500 down 61. Okay. Now, it's not as bad as it seems because people are going to be out there just like slashing something because the Dow was down so much and the S&P was down 60. That's a lot for the S&P to be down. However, see, as soon as this happened Sunday night, I couldn't get to the channel quick enough and tell everybody, hey, we're looking for the gap close. I'm not saying we won't trade anything long if the market persists, but pretty much, I mean, the market just made it so simple for us Sunday night. This big gap, wait for it to fill. Now, here's the thing. Because of the China news, the tariff news, there were a lot of buyers in here, whereas this thing might have just, you know, closed yesterday. Every time we get a little bit lower, buyers would come rushing in because they thought that was the bottom. And no, maybe this is the bottom. And so now people are going, I'm not sure if this is the bottom or not. Is it? Is it? I don't know. I don't. All right, Russell 2000 is down 43. So that's almost 3% for the Russell. Now, the Russell really led the way down Sunday night, yesterday, and today. The Russell closed its gap yesterday. My goodness. Look at that. All right. In the commodity basket, crude oil up 6 cents, trading 53.01 last. Gold up $3.10, trading 1242.70 last. In the Asian markets, at the close, the Nikkei was down 538 points. It's over 2%. Shanghai was positive by 11, and the Hang Seng added 78 points. In the European markets, the FTSE closed the session down 39 points. DAX was down 130. The CAC was down 41. Now for the DAX, that's a little over 1%. And for the CAC, it's almost 1%. So a mixed day in Asia, a red day in Europe, and it's a pretty red day here in the US of A. Let me update the numbers real quick. We got a little bounce going. I would not consider getting long at this point because this short move is not over. We don't have an exit signal yet. I would never think of going long the market until I first get an exit signal. And I hope you would do the same, and you can if you have the indicators. And there's so much volume surging through right now that I don't think I could even get my indicators. In the last 8 minutes, we've traded 104,000 contracts. There they are. So if you took this move with us, here's what will happen. Okay. See the CFMA1, red and falling, down here. Take a look at the slingshot, red and falling. See that? Okay. As long as those are in place, no way do I think about going long. In fact, we were short coming down through here from the alert channel, and so let time work for you. Now, if this thing all of a sudden ignited and went crazy to the upside, yeah, you should. If you're still short, you should get out. My suggestion is wait for the exit signal. You won't get out at the swing low. No one ever does, except by accident, because you don't know it's a swing low till after the fact. Although some people might have you believe otherwise, but that's okay. All right. So, do we get a bounce? We're at it. Do we have any more weekly trading zones below 1? 2677/78. Could we go there? Absolutely. But we're going to be patient. Okay. The market's been very kind to us. It was kind Sunday night. It was kind yesterday. It's kind today. A little head fake right there. Okay. A lot of people getting long and getting their head handed to them. But we knew better. Okay. Historical observance. It's a great thing. You learning how to read a chart like a newspaper, that's a great thing. If you're not a partner, if you're not a passport holder, get a hold of us. Talk to us about what it is we offer, the training, the indicators, the mentoring. It's everything a trader needs. One low price. Michael, if you're here.
Of course I'm here. Of course. I am here. Let's bring it over here. You know, the thing that I'm surprised about is that the crude oil is holding up so well.
Yeah. Hey, I think we should start doing like what Sean Hannity does. Every night on the Fox News, on the Fox, yeah, it's a special edition of the Sean Hannity show. So my son picked up on that. It went right over my head. He goes, "Hey, Dad, how come every night Sean has it's a special edition?" I started laughing. I go, "Hey, that's pretty good. Yeah. You picked up on that. You've been hanging out with me." Okay. All right, you got the chart. I'll pull it up. Put it right in front of you.
Okay.
And then I'll hit mute. How long do you think this will be?
I don't know how long you want it to be.
I don't know. Can we make it 5 minutes?
Oh yeah, at least 5 minutes.
Maybe 10?
At least 5 minutes.
Okay. All right. Let me hit mute, and it's all yours.
Okay. Okay. All right. Well, it is 12:42. Oh, I didn't realize it was that late. Wow. I did not realize it was 12:42. Okay. Well, yeah, I'll make it at least 5 minutes. Oops, that's not what I meant to do. What I was doing is not working anymore. Okay. Oh yeah, this is going to be at least 5 minutes. Everything just locked up on my computer. And I can't click on anything. That's bad news. Okay. Let me pause the screens. I can't pause the screens. All right. Well, let's just say today, well, first, give me a second. Let me figure out what's wrong with this. Hang on. Valerie, are you there? Tell you a story. Valerie? Is that you?
It's me.
Okay. Can you take the charts for a second? Because everything just froze on my desktop. I can't even send them to you. Do you know how to take the charts?
I do not, but I think I'm going to figure it out.
Okay. In the
sharing?
Well, yeah, in the sharing, it says change presenter.
Yes.
Change that to yourself for just a second. And then I'll change it back to me once you do that.
Okay, great.
If it lets me. Okay, it is not letting me. Gosh darn it. There's something hung up here. I'm sure I have Spooler Subsystem app. I don't know what the heck that is. But Trader, meeting. Let's let me move this around. So let me move the DOMs around. Okay. I think I'm back. I can change it back now.
Okay, great.
Okay. All right. There. I'm back. Valerie is a new addition to the CFRN team. That's Valerie Espart. Okay. Today, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 4th day of December, 2018. Today we made 7 ticks on crude and we lost 4 ticks on the ES, putting us at plus 20. We did not get the goal for the day, and we took 10 trades today. So on the month now, we're up 185 bucks. That's over 2 days. Okay. On the year, we're at 35,158. That's over 224 days, averaging 156. Averaging 156. Okay. Now, if you have not taken a free trial with us, go to the home page at cfrn.net. And right over here on the right-hand side, it says apply.cfrn.net. If you click on that, you'll be brought to this page. And on this page, yeah, Randy, I'm going to post it in here in a minute. And on this page, all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know you took the trial. Okay, so here we are. In gold, we had 1 trade opportunity this morning. It was right here. And we got a break even on it. Let's see, during the break. Not really anything during the break either. Gold has just been, I don't know, almost untradeable lately. Crude, oh, this isn't crude, sorry, the euro. The euro. Crude was the next thing on my mind. In the euro, we stopped out to begin with. And then we had a shorting opportunity here where we got the 8 ticks back. So we were stopped out minus 8 ticks, and then we got 8 ticks back right there. And then we had a break even over here. Let's see. During the break, you could have probably shorted right in here. You know, from up here on the higher part, I think. Yeah, there was still a little bit of separation down here. And then you could have done it again from here. And then it got choppy and sideways, and it changed directions right over here. And there's no trade here because it did not break this dynamic resistance yet. Okay, but look for a pullback there. Now, here on the Crude. Yeah. we missed a few trades on the crude this morning that definitely would have been goal makers. But, you know, it was cold. I had to go put on a heavier shirt. See these three right here. Missed all three of those. Okay, so here we go. We started out on crude, just not having any trade setups because nothing was trending. And then we had 3 trade setups that happened as we put in a higher high right in here, and we had higher lows. We had 3 trade setups that happened as I stepped away to get a shirt. And then we had a break even over here. Okay, this is the only one that we actually took so far at this point in the day. And it looks like the market was giving you a nice trend, but down here in the slingshot, we weren't getting the trade setups. Okay, then right at the end, we got a couple of them. We got a +3 and then a +4 to put us at +7 on crude. And during the break, it looks like there was a shorting opportunity right here, and then change directions, and there's a long opportunity there, and a short opportunity right here, right there. Let me see if that's all that happened during the break. It looks like it. Yeah, there was one more short right in here. Okay, and that was crude today. Now the ES, during the break, the ES just tanked. You know, and yep, look at it on a larger time frame. Okay, get on a larger time frame. And you see, this was during the break. All this right here. 11:30 to 12, 12 to 12:30. And the low of the day is down here at this weekly trading zone. And so, you know, on the news, if I'd have gone out just a couple more days on those options, boy, they'd have been killer. But anyway, I didn't. I chose November 30th because you pay for time with options. Okay, I'm just going to go over what we did in the room, okay, because I'm sure there were probably 100 trades that happened during the break. Oops, I went too far. And my charts are not cooperating. A little bit more. Okay. The first trade we did on the ES right here, we stopped out -8 ticks. Okay. I didn't go long here because we didn't really have a good established trend. Then we did establish one over here, and we took a short there that was a break even. Yeah, and we got down to this weekly trading zone, and it was in and out of that zone for a long time. And then over here, finally we had higher highs and higher lows, and started to get off the zone, and I took 4 ticks profit there. Then it changed directions, got back into the zone for a little while, and dropped down below it. And I had a break even right over here. We weren't really trending here, that's why I didn't take this short. Okay, I didn't like the way that it looked. And you know, it didn't really start giving you a nice established trend until way over here. And this was all during the break. Okay, so yeah, there were shorting opportunities in here to get down to that zone. And then the next zone was pretty close. It was pretty nearby. There was not a shorting opportunity there. Got very choppy in here. Didn't want to do anything with that. I said I wasn't going to do this, but I'm doing it anyway. See, then I got back into this zone. So you can't do anything when it's inside a zone like that. Then it started to pull out of the zone in here, giving a couple of shorting opportunities in here. And then it was out of the zone, giving a shorting opportunity right there. And that was it. Now you see it's changed directions. It's starting to bounce a little bit. And it's 12:52. And I have another meeting coming up. I'll give you the link too in just a minute. Okay, and right here, there was a long opportunity. Okay, and right in here, yeah, there was there too. It would have been a break even. Then the slingshot was just all messed up after that. Okay, I'm scrolling, but it's not. Okay, well. Anyway. And that was the morning session. Okay, so let me bring this up and say, if you have not taken a free trial, go to the homepage at CFRN.net. Right over here on the right-hand side, it says 5-day free trial apply.cfrn.net. Click on that. It will bring you to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, you don't get the free trial. Back to the spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 4th day of December 2018. We made 7 on crude, and we lost 4 on the ES, bringing us to plus 20 bucks. So we didn't get the goal for the day, but we did end positive. That's why it's yellow day. All right. Not today, this month so far, we're at 185. That's over 2 days. And on the year, we're at 35,158. That's over 224 days. Now, these are the monthly totals for the rest of the year. Okay, this is the last month of the year, so we'll see how we finish out the month. I mean, the month and the year. Okay. Yeah. Let me get that link for you. Hang on a minute. Hang on a minute. This is the link for the 1:15 meeting. I have it right here. All right, it's at 1:15 Eastern time. Okay. Paste. Send to all. There you go. So you got it, Randy. And you got it too, Bobsy. And that's it. With that, we can pass it back out to Studio A. Fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are in Studio A, you can grab it. And I actually made it 12 minutes.
Good job. Thank you.
Okay.
Gave
No
me
problem.
ample time.
Thank you, Valerie, for the assistance.
You bet.
My chart coming back. Yeah. Okay.
Yes,
All
I
right.
can see your chart.
Recap of the recap. Well, I just saw it. It was yellow. So
Yeah, it was a yellow day. We didn't get the goal. 10 trades plus 20 bucks.
got it. That's the truth about trading, folks.
It is.
Aren't very many trading shows where they'd actually tell you that. We had a rough morning. They'd make something up. Like, well, the Dow dropped 600 points on fear of slowing economic growth. Okay.
Yeah.
Have fun with that. All right. So, you got to go do that other meeting, right?
Yeah.
Okay. You don't see John out there, do you?
I do not. No, wait, he is there. He is there. Yeah. Hang on, let me open up his mic. Okay, his mic is open.
Hey, John, you there? Okay. Just leave it open and I'll mute it if he starts snoring.
Okay.
Okay.
Okie doke.
All right. Okay, buddy. Talk to you soon. All right.
Yep.
Okay, here we are. Back in the thick of things. Now, I drew these fibs from the low to the high, right? But it just looks kind of junky, so I'm going to, now that you know what the numbers are, I'm just going to get rid of them. Too much clutter for me. Now, I wasn't always like that. I used to have, I had to get extra monitors just to put the stuff on. I didn't need to see price. I just wanted to see the stuff, the shiny stuff, the magic. Just show me the magic. There is no magic. Okay. 27.19. Okay, so the next weekly trading zone below, we came, that's close enough. Remember, it's an area, right? So get real close. So what do we do now? Do we Do we take back all this territory? To put things in perspective, okay. Again, what are they calling it? Let me see. Refresh my page. The S&P is down 60 points. If we close this far down today or further, boy, you're going to get an earful on the way home. At night, tonight, when you're trying to watch the news, it's going to pop up on your Facebook, who knows, Twitter. End of the world. End of the world. No, we're in the same place we were Friday when we said, okay, President Trump, he's going to have dinner tomorrow night with Xi Jinping. And if it goes well, the markets will run higher Sunday night. And if it doesn't go well, if somebody walks out of the dinner, then the markets will open and go lower Sunday night. So now that doesn't take any kind of special magic. You can read the newspaper and go, okay, Trump having dinner with Xi Jinping, that's a big deal. If it goes well, the market will respond favorably. You know, basic stuff. But that basic stuff, the stuff that a lot of people, you know, they want, it's exotic, esoteric stuff. I know, because I was one of those guys, and I got rid of all this stuff. Just got rid of it. I sat for a long time with a chart that had nothing on it but candles. I'll be honest with you, I didn't really know what I was looking for. I knew what I was looking at, but I wasn't too sure what I was looking for. I just kept looking. And then slowly but surely, sort of put a couple of indicators back on. And that led right into what Michael and I have created here with CFRN, the CFRN indicator set. It's all I need. I don't need anything else. I don't have to go out and learn any. I don't have to. No more studies. No more oscillators. I just, because what we have works for what we do, and because it's based on the rhythm of the market, the underlying rhythm of the market, and nothing else, it will always work. I don't know why other people don't just, they try to dissect the market, slice it and dice it and label it and collate it and file it away. No. What we designed our indicators to do is to go in, find the underlying rhythm of the market, and then give us a high probability entry, which it does again and again and again. So as Michael told you, if you've not taken the trial, do that. If you want to, there's going to be 2 more days of the Logic 247 trial. We don't have a trial. In fact, I've only had 1 trial before, I think. We had the beta test. Now we're in week 17. We did 3 weeks of beta. Then after beta, we started at week 1. We're on week 17. I think I've done 2 trials. And so those of you who are on the trial, Monday, Tuesday, Wednesday, you get to stick around Thursday and Friday. And any of you in the audience who did not get a chance to get signed up for the trial, you can come in on Thursday and Friday as well. What you need to do is you need to send an email to logic@cfrn.net. logic@cfrn.net, and just say, trial please. That's all. And Valerie will get you out the information that you need to get into Telegram, get into the channel, and you'll read through all the stuff that I've written this week, and that'll get you up to speed so that when we come back Thursday, well, truth be told, the markets are closed tomorrow, but tomorrow night at 6 p.m. Eastern, markets will open for the Thursday session. So there will be Concierge Trade Alerts tomorrow night. There will be Logic 247 alerts tomorrow night, okay, and Thursday night, and Friday. So those of you that want to take advantage, just send that email, okay? All right. Let me just walk you through a little bit of it. Not gonna keep you long. Okay. So how far would I have to scroll up? Pretty far. Not that far. This little slider in Telegram, that's if there's any one thing I would complain about Telegram, it's that if I can make that slider a little more visible over there. We put out alert number 1000 this week. I know. That's what I said. Here we are. Week 17. Hokey doke. First alert this week, Sunday night, 6 p.m. Eastern. Alert number 998. Consider selling the ES. Trail if possible. Gaps on futures almost always close. This is true of at least the indices. To borrow a phrase, tonight's open may be a bit overdone. I don't speak overbought or oversold, as both can become terminal positions. This is not to say we will not trade to move higher, but first our defenses, wit, and logic must be in place. And so we read the newspaper and said, okay, well, this is what it's telling us. And we just have to believe that until proven otherwise. So we, this is the S&P from 84 down to 78. This is the Dow from 775 to 725. That's 50 points at $5 a point, $250 per contract. However, it dropped substantially below the target. And of course, when you become a partner or passport holder, we teach you how to remain in those trades until the exit signal prints. Here's number 1000, the Russell. And that one dropped all the way to 1528. Now, the target was 1543. It dropped to 1528. On the chart, it's as clear as day. Stay in. In Q, stopped out. Oh, and I posted this Tom Petty video Sunday night, free falling, because what we saw happen today, I thought for sure we would see that maybe Sunday night, you know, kind of anticipated it. But the market drug it out. 2.5 days.
It was a good call. It was a good call.
Oh, thanks, Sean. Glad you're here. Welcome to the show. Thank you very much.
Yeah, look, you know, sometimes when you get these kind of chaotic upside gaps, there's a tendency to come down and start over from where it started or lower, which is about where we are right now.
Right. Well, you know, we're no worse off than we were last Friday.
Right, exactly. And you know, remember I was warning about the structure of the weekly. It's turned into a kind of a zigzag deal. We can look at that in a minute. But while we've still got this chart up, remember the real bottom of this October bottom came off a day like today, where the market just like, you know, went into a total swoon and looked like, you know, death. And then remember, it started rallying in the afternoon. We clawed back probably about 2/3 of the losses. Sorry, 1/3 of the loss. And the crazy thing is, the next day it continued higher, and that was really it. So you had to be in there, you know, kind of about where we are right now. Now, one of the craziest things that's happening today, I don't know, you know, whether this is the yield curve inverted that's triggered this, because all the banks are getting hammered and the transports are getting, you know, absolutely massacred. We have possibly this might be one of the biggest down days in transports in history.
Really?
Because we were down 500 points at the worst. And, you know, the multiplier is about 2.5. The transports, you know, the Dow is 2.5 times the transports. Okay? Transports to 10.5, and we're 27,000. So we're the equivalent of a minus 1,250 Dow loss today, basis the transports. Hold on.
Sure. So far, we're into the second 30-minute candle, holding up above that weekly zone at 2718/2719. Continues to hold. We'll go back up to revisit that 2742/43. And as we consolidate it over here, we'll probably consolidate here. We may move higher. We may reclaim some of this territory before the week is out. Remember, U.S. markets are closed tomorrow. CME, New York Stock Exchange, NASDAQ, CFRN. No radio show, no live training room. Okay. So after I posted the free falling video, we said to consider buying crude, and we hit the target on that. We had a target at 53.10. The exit signal appeared at 53.64. What does that mean? It means if you did not get out at 53.10, the target, if you stayed in until the exit signal appeared, that's an additional $540 per contract. And the exit signal appeared and said to exit the trade at 53.64. I know it's hard to stay in, but if you get on the 30-minute chart, once you get your entry, if you have to go, we have a method of selecting which chart we're going to use to position our stop loss. If it's anything other than 30, as soon as you get triggered into the trade, you need to go back to the 30 to monitor it. It'll help you be less nervous. It really will. Okay, then we had a series of no triggers. Well, this isn't them. This is just one. In a minute, we'll come up on a bunch. And let me just say that not all alerts are expected to trigger. Some of the alerts, and I'm not saying that's all of these, but I'm sure it's a few of them. Some alerts are where we see a situation in the market, and it's pretty obvious what everybody thinks is going to happen because everybody's positioning themselves and trading in that direction. And I go, yeah, okay, but what if? And I see that the greater reward would be to go the opposite way of the crowd. That's just in case. I mean, there's going to be another opportunity that comes along anyway. So we don't worry about the ones that don't trigger. They don't trigger. I look at all of these alerts as it's your inventory. When you come in to sit down and trade, you don't have to sit there and stare at charts and screens for hours on end. All you got to do is turn on the logic, and out starts dripping out the pipe. Since you last turned it off, stuff's been backing up. Turn it on, here it comes. And because important prices in important areas are almost always tested, go find a couple that triggered real nice and gave a nice move. Look, see, well, probably going to be, an hour before it comes back to test, maybe 2 hours. With some time in front of the charts, you'll be able to see these things, okay? And I'll help you with it. Here's gold. I think this is the only gold trade we've had all week. 12.32 to 12.20, just $200. But it did run up to 12.37.80, so that was $580 per contract. Soybeans stopped out. Natural gas, no trigger. Copper stopped out. We were looking to sell 283 to 282 to 281. Price dropped below 280. That's $500 per contract. However, for the record, price stopped out by a few ticks on the first trigger. This is the euro. Reach your target. ES stopped out. YM stopped out. Russell, no trigger. NQ, no trigger. And the Australian dollar, no trigger. This is that string of them. The ES, no trigger.
Hi.
Yeah.
Okay. Boy, this is a crazy day. I mean, remember we talked about how the first couple of days of December are good, and then everything turns. Wow, this is heavy duty stuff going on here. I mean, this is scary because the well, the first thing was the VIX. The VIX took a while to get going this morning. That was a little bit a kind of masqueraded what was coming, if you like, or masked what was coming. And then when the downturn started, it's been pretty heavy, relentless actually. And I just ran into a new analyst, and she's actually very, very smart. And she was saying that she thinks the Facebook, the FANG thing is over, at least for the time being, and that these all rallies should be sold. And that was a pretty good call on Apple. Apple and Facebook in particular, she was saying were sells, and they're really getting hammered today. Everything's turned down.
Yeah.
It's very bad. I know. Look, one thing about markets is, and I'll never forget this. In 2000, most market crashes happen in October, right? But you remember what happened in 2000? We had the first quarter. We made the highs March 10th and March 24th. Remember, the second high was my famous sell signal at 5,000 plus we were about 5,024 on the NASDAQ at about 2 o'clock in the afternoon, right, when we put out that sell. And by an hour later, it was below 5,000 and stayed there for a decade, or more. And I remember thinking to myself, crashes aren't supposed to happen in April. Right. Remember, we had a 1,000-point down day on the Dow, I think around April the 5th or the 13th or something. And just because it's Christmas, don't think that the market can't go down as bad as it is today. People sort of think that the Santa Claus rally and all that is going to bail us out. Not necessarily. And there are a lot of factors. There's got the Brexit thing, and you've got the whole tariffs thing. Somebody says something wrong about the tariffs, or it does get misinterpreted, everything could be reversed, and maybe that's something that's going on today. This is can you put the weekly up again, Dwayne? That's the daily, right? Yeah, look at that doji yesterday. Holy mackerel, look at that. Yep. Jeepers. So
we got a high, a lower high,
yeah,
and a lower high.
You know what's the problem with that? I mean, this is you got a triple top here, and you got a kind of triangular formation that actually looks like. And remember, it's very markets don't always, or more often than not, do not do the same year over year. They have a habit of doing the same every second year, every fourth year, and sometimes every third year, but it's very rare for the market to do the same. So just to think that because we're going into January, we're going to have another big, huge surge like we did last year is probably, not something you want to automatically bet on. And, if it happens, it happens, but the odds of it actually are kind of against. And in a way, we might see a downtrend, in January, maybe going into February, March, and then we could have a big rally into the second, third quarter. We might have a summer rally or something. So in 2019, and the Fed could, and as you know, I think the Fed is going to lower rates in the first half, that would obviously help the markets put in a bottom, possibly either February, March, sometime around then. It's kind of the way it looks. So, but this triple top here is very, very dangerous kind of development. And if you look at the weekly, we got kind of a huge zigzag type deal, which kind of, you remember we've had this target for a long time. See that? Is that the weekly?
This is weekly.
Yeah, look at that. This is a pretty heavy down. It really is. You could almost see this market going down to 25 to the 2,500 level.
Yeah. 2,400. That would give us a a 50% Fibonacci retracement from the lows back in spring of 2016 to the most recent high, 2,400 right there. We talked about that a little earlier. And of course, everybody would be running around, the sky's falling, it's the end of the world. And no, it's not. It's the market doing what markets do.
Yeah. And you know, when the Dow comes down to about 23,000, 22,000, you know, 10,000 points from 22 takes us up to 32. I don't think the Dow can get up much above 32, 33,000 by 2020, but, you know, it certainly could have a huge rally starting sometime next year, or starting from a lower number, where we could see actually potentially a more, look, after this correction, you know, this bull market that took us up to here is impressive enough, but the next phase of this market is probably going to be the crazy phase. You know, it's probably going to be almost a near vertical upswing, in my view. You know, it's going to, if this is a, look, yeah, here's
what's the catalyst for that?
Well, look, if you look at the wave count, you have a 1 2 1 2. One of the features of this bull market is, you know, ever since 1975, you've had a series of 1 2 1 2s, followed by long third waves, followed by 3 4s. We're in a 3 4, balancing the 1 2 1 2 now. They're about the same length, and the 3 4 is usually bigger than the 1 2s. And then beyond the 3 4, we go into a fifth, and fifths usually go parabolic. So you could see a kind of a parabolic upswing from here into a fifth wave. And that would be the one where, you know, everybody thinks we're going to the moon, and you know, classic bull market where there's total euphoria. I don't think we had anything like euphoria back in January last year. We were starting to get it, but nothing like a really major market blow off, you know.
Right. That's true.
And we could, and look, it's not inconceivable. There's still there's still analysts, I think, thinking that Amazon might go to 2,500. You know, Microsoft could go to 130. I mean, Microsoft's actually maybe the next contender to be $1 trillion company. So, you know, they're going to take it in turns. First it was Apple, then it was Amazon, now it's Microsoft. Maybe the next one after that will be Google. And remember, there's a lot of innovative things coming in the next couple of years that are going to be very, very positive for the markets.
Yeah, these flying cars are apparently so imminent. They're already starting to map out the sky and figure out how they're going to route traffic.
Yeah, no, it's coming, and it's coming quicker than you think. And when you see those spectacular, you know, contenders like Aston Martin, that looks like something out of Star Wars, you know, it really is, you know, a forerunner to that kind of flying vehicle. It's very exciting, and it's coming. And look, I don't know, I think on Twitter yesterday, I saw this guy flying around on that, you know, that thing was strapped to the feet with jets on it. Yeah, and that's happening. That's now. It's happening more and more.
I don't understand how you keep your balance with something like that.
I know, it's amazing, because when you see him flying, it makes it look so easy. But it is, and you know, there hasn't been any accidents. I don't think he's had any close calls. And I think this guy's, I mean, some of these things have done about 10,000 hours worth of flying already. You know, that one we looked at out of California? That looks a little bit like the Lilium. So and look, the FDA approved another cancer drug last week called, it's got a funny name beginning with V, but if you go to NBC News and just put in FDA approves cancer drugs, it'll come up. This is just astoundingly breakthrough treatment that is a little bit different from the 4 other contenders that are out there at the moment. This one is targeting the DNA or the mutations. You have to have a sort of a test to see whether the thing will work, but it's not limited to any part of the body. So and apparently they tried it on some people who had some really horrible looking tumors, and they disappeared almost within days. It was just staggering. So there are 5 major new generation immune therapy cancer drugs out there today, and led by Keytruda, which is the one that cured Jimmy Carter's brain cancer. That's where it suddenly got notoriety. It's put out by Merck. If you look at Merck's stock, it tells you, that could be a huge boost to the healthcare and to the biotech firms. You remember in 2014 the biotech sort of went parabolic. They've had a 2 or 3 year, 4 year correction now, and they could be they could be the leaders of this next upswing in the markets. You've got Keytruda, Ibrance, Verzenio, and Optiva. Those are the 4, and they're a lot. Verzenio and Ibrance are especially targeted at breast cancer. But anybody who's got cancer out there, anybody who's listening. In fact, a friend of mine, his wife's still getting chemotherapy, and I said, I already sent you all this stuff. I said, call your doctor. Some of these doctors, just not up to speed as to what's going on. They may not even know about this. I said, you got to get hold of your doctor and say, can this work for my wife? Because you only get one chance in life, and if you got cancer, this is a way that you can get cured. So I'm happy to send, if anybody sends any requests in, I've got them all ready to send out to anybody. I'd be happy to do that.
Okay. All right. Great.
Okie doke. Well, listen, the other thing is the oil popped up to 54 this morning, but it's come off again. So,
yeah.
And it looks actually like the natural gas is going to take another hike here.
Here's natural gas. Yeah. Well, it never closed. It never closed its gap.
Yep.
It gapped lower.
Yeah, it could go right up there. Could go right up there.
I think so.
Yeah.
I think so. All right. Well, thanks, Sean.
Okay. Thanks a lot. Bye-bye.
Talk to you soon. Okay. All right, guys. It's time for a good word for the day. Yeah, we've been talking about it's an inside job for the last couple of days. And if I can pull up my notes. Apparently I can. It's an inside job part 3. John 14:6. I will pray the Father, and he shall give you another comforter, that he may abide with you forever. John 14:16. There are many benefits to receiving the Holy Spirit. In the New Testament, Jesus told his disciples, I will pray the Father, and he shall give you another comforter, that he may abide with you forever. Now, the Greek source for the word comforter is parakletos, which means one who comes alongside you to strengthen, encourage, and advise you. Think about it. When you feel discouraged or confused or powerless, you have access to a wise, compassionate, competent helper who will show up to support you and supply you with what you need. So instead of struggling to go it alone, learn to lean on him. Trust his power and ask him to do his work in you. Here's another Holy Spirit blessing. Paul tells us this in Galatians 5:16. I advise you to obey only the Holy Spirit's instructions. He will tell you where to go and what to do, and then you won't always be doing the wrong things your evil nature wants you to. Ah, wouldn't that be nice? The battle of the Spirit versus the flesh is constant, never ending. And however well intended, our fleshly nature can never be subdued by human thinking. That only produces defeat and discouragement. And another advantage of the indwelling Spirit is that you qualify for a Spirit-directed lifestyle. The Bible says in Romans 8:14, "For as many as are led by the Spirit of God, they are the sons of God." Praying and taking your best guess isn't God's way. The Holy Spirit's guidance, not your guesswork, should direct your lifestyle. That's our good word for the day. All right, guys, remember, markets are closed tomorrow. We're closed tomorrow. I'll see you all on Thursday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.